Virtual currencies, a gift that keeps on giving. Supporting religious communities, schools, and other social interests is an important part of many people's financial planning. The government generally encourages this type of benevolent behavior by allowing charitable donations to offset our tax liability in some circumstances. However, do the same rules apply when it comes to cryptocurrency? Most accountants are familiar with the long-standing Internal Revenue Service (IRS) policies regarding charitable giving. However, they may not be familiar with the rules and regulations that apply to cryptocurrencies. The skilled and experienced certified public accountants (CPAs) at Happy Tax offer tax advice and planning services specifically focused on cryptocurrency transactions. If you've made a gift or donation of cryptocurrency, make sure you understand how this impacts your tax liability. How does the IRS treat charitable cryptocurrency gifts? If you give to a qualified charity, the IRS allows you to deduct the amount from your income tax. This is true whether you give cash or property, which is deducted at the full fair market value of the asset at the time. So, for example, if you buy a car for $15,000 and drive it for several years until it depreciates to $1,000 before giving it away to charity, you can only deduct $1,000 from your federal income taxes. Since the IRS treats cryptocurrencies as property, you are generally allowed to deduct the full fair market value of your donation to a 501c3 certified charity. So, if you bought a Bitcoin when the price was $500 and then donated it to charity when it is worth $15,000, you should be entitled to a $15,000 charitable contribution deduction. Additionally, you may be able to avoid paying capital gain tax on the $14,500 your Bitcoin appreciated in value. Do the same tax benefits apply to cryptocurrency I give to family and friends? Charities who qualify for 501c3 status must jump through several legal hoops to prove that they are eligible for tax-free donations. As a result, giving virtual currency to friends, family, or uncertified charities will not entitle you to a tax deduction. What's more, if you make a gift of more than $15,000 in cryptocurrency, the annual exclusion allowed under the 2018 tax rules, you must file a gift tax return along with your other tax documents. However, for gifts under $15,000 in value, no additional reporting is required. Charitable giving is not only a great way to support causes important to you, it's also a useful way to limit your tax liability. However, any claimed deduction must comply with IRS reporting and payment requirements. This is true regardless of whether you've made your donation using traditional money or cryptocurrency. While gifts to non-charitable organizations don't receive the same tax benefits, private virtual currency gifts must also comply with current and future IRS regulations. Failing to properly report and pay taxes on cryptocurrency investments is a serious matter and could possibly cause you to end up in federal court. Happy Tax is here to make sure you avoid the tax pitfalls in the constantly changing world of virtual currency investments. So contact a friendly cryptocurrency tax professional at Happy Tax when you're ready to plan your taxes.